Is the Silicon Valley housing market about to shift, or is this the perfect time to make your move? I'm Keith Walker, and my goal is to help you cut through the noise and make smart decisions in today's market. So whether you're thinking of buying, selling, or just keeping an eye on the market, here's what matters for you right now in Silicon Valley. Let's look past the headlines and focus on what's truly happening. With that, here's my May market update. Despite all the noise, elevated rates, tariffs, and global headlines, the underlying stats continue to point to a healthy housing market. This is also the time of the year we start to see the seasonal peak of purchase application data, which helps to project 30 to 90 days out of purchase activity. However, the last 2 weeks, purchase applications have had double-digit year-over-year growth. The buyers are getting comfortable enough to jump back in. And I'm sure you've seen the stock market rallied back as tensions eased, which not only helps consumer confidence, but is also a major factor in local buyers' down payment. Now check this out. New construction and housing starts are slowing. That leads to less competition for existing single-family homes down the line, which is good for current homeowners. Active inventory itself is growing, giving buyers more choice, but there's no flood of panicked sellers. And while price growth is slowing, it's a positive. When prices rise too quickly, we risk corrections. This moderation is healthy and sustainable. Now, as far as statistics, we continue to see good news across the Bay Area real estate market this week. Housing inventory increased 2.1%, with the majority being in the townhome and condo category. Pending sales increased 3.7% overall. There was a discrepancy in the two categories as townhomes and condos saw pendings decrease by 1.3 week over week, while single-family home sales surged with a 6% increase. The average days on the market have stayed consistent and even decreased a bit over the last couple weeks to 14 days. Single-family home prices continue to appreciate month over month and year over year. They currently average just over $2.45 million. The average townhome and condo price slipped for the second consecutive month, but they're still up since January. And once again, no doom and gloom data trends in local real estate. So what's different this year? Well, in the last 2 years, we'd already seen the seasonal peak in home sales by now, with activity dropping off. This year, don't be surprised if the market stays active a little longer. Consumers are waiting for rates or headlines to change, but so far things remain calm and steady at the local level. There's no sign of a wave of new inventory. Most homeowners are locked into historically low rates and historically high equity, so there's little incentive to sell unless it's the right move for their household. Now let's get into the rates, the tariffs, and the Fed. Rates are stable. The Fed's held rates steady for the last 3 meetings in a row with no projections or cuts until at least June. That's a sign of stabilization, not uncertainty. Tariff headlines are making some buyers nervous, but so far they haven't had a real impact on the market itself. So recession, no recession. If we continue to get good economic news, rates will likely hold and confidence will grow. If we get bad news, rates could drop, which would most likely bring more buyers off the sidelines and increase competition. Theoretically, both avenues are wins for housing prices. So what does this mean for you? Well, if you're a buyer, this is the window you've been waiting for. Seriously, it's time to act, and it may not last long. Less competition, more inventory, steady prices, and stable rates. If rates drop, you can refinance. If prices rise, you'll wish you bought now. Don't wait for a Silicon Valley crash. It's not coming. There's absolutely nothing to support that possibility. The current opportunity means buying without bidding wars and banking on future appreciation. For sellers, there's no need to panic, but don't expect a frenzy of multiple offers. Price your home right, make it shine, and you'll do well in this balanced market. If you're not getting the offers you want, it's likely a pricing or presentation issue, not a market collapse. So my final thoughts. Don't be surprised if the second quarter's activity shifts into the third quarter, basically meaning that the fall market becomes the spring market for 25, meaning more fresh inventory coming to the market and rising sales numbers. We've seen it before in this valley. If you want tailored advice for your situation or a deeper dive into your neighborhood, reach out today. Drop your questions below, subscribe for more updates, or contact me directly. My team and I are here to help you navigate with confidence. Once again, I'm Keith Walker, here to educate and navigate, not speculate and fabricate. I look forward to hearing from you.